main message really to central bank governors and ministers of finance is that we need to defeat inflation. And that requires a concerted effort. It means for central banks and for the European Central Bank, it means further tightening is required. And when the terminal rate has been reached, that terminal rate needs to be maintained for longer, because core inflation is high and is very persistent. And there's nothing worse than pausing an inflation-fighting effort too early, or abandoning it too early, because if you need to do it a second time, the costs to the economy are so much larger. The message to the ministers of finance is you need to support this disinflation effort by the central bank. And that means that fiscal policy needs to be more restrictive, and you need to start consolidating. What does that mean? It means when windfall taxes are accumulating, they should be saved, they should not be spent. What it means for cost of living packages, energy prices are coming down. Many of those can be phased out. And if they're not being phased out, they need to be made more targeted, because that adds to demand in the economy. Demand creates pressure on inflation. So finance ministers need to provide that support. And I should say, finally, not to forget structural reforms. Not only important for the medium term, but also helping in the short term with labor market being very tight, by increasing labor force participation, over time increasing the skill levels, the training, and that will help also on the disinflation effort.
Let's focus on inflation to start with. You're saying that your main message to the central bankers, fight inflation, let's fight inflation. But is your message fight inflation at any cost? Because, for instance, when we look at the banking stress that happened in America, clearly a part of that was also driven by higher interest rates.
What you see is that central banks need to focus on monetary policy, and monetary policy is coming with the objective to defeat inflation. At the same time, of course, we need to maintain financial stability. And there's no question about it that a tighter monetary policy, after 15 years of low interest rates, is creating financial stress in the system. But let's look at this financial system. We have banks which are sound, which are well capitalized, which have high liquidity. In Europe, they're well regulated and they're well supervised. These banks should withstand financial stress that comes with the tightening. But of course, you need to be vigilant as a supervisor. You want to stress test that you know where the vulnerabilities are. And you want to be very active during this period to protect this financial system. But that should not get us away from monetary policy to focus on fighting inflation.
When looking at the forecasts from this report in terms of the Eurozone expectations, inflation in 2024, you still projected above the ECB's target. Does that mean that the ECB between now and the end of 2024 needs to be increasing interest rates?
The ECB needs to be increasing interest rates relatively early and need to maintain those through at least mid-2024. We expect to come back to the inflation target of 2% during 2025. That's our message to the ECB.